Welcome back to Fast Money. We've got an earnings alert on Gap. The stock pulling back from its after-hours session highs, still up, though, 3.25%. The company's call is underway. Let's get straight to Bertha Coombs with the details. Bertha.
Yeah, it's all about online, Melissa. Total net sales were down 18% year over year, but e-commerce sales nearly doubled. That resulted in total Gap same-store sales up 13% once stores reopened in the quarter versus analysts' expectations of a 25% decline. Old Navy, the standout, as usual. With more standalone and off-mall stores, net sales were down 5%, but online sales surged 136%. They were able to better do that curbside pickup, and comps rose 24%. Gap net sales took a 28% hit, but comps rose 12%, also getting a bump from online. Banana Republic, that's the laggard. Consumers turning away from fashion and workwear and toward athleisure. And take a look at Athleta, which tends to discount less than others. It actually saw net sales up. CEO Sonia Singhal said that actually 24% of sales between Athleta and Old Navy were in that athletic gear area. And she says the strength in the performance was due to being able to meet the moment. They nearly doubled e-commerce, approximately 50% online penetration, because they were able to pivot to this digitally led culture. She says back to school is going to be a lot longer than usual because of all of the different situations between some areas going back in person, some areas going back online. But she says she continues to see this momentum in the back half of the year. Melissa?
Bertha, thank you. Bertha Coombs. Tim, you were excited about this well-timed Citi call. Turns out to be well-timed. They upgraded Gap shares to a buy on Monday ahead of this quarter.
That was 20% ago in the stock. Same-store sales comps up 13%. Bertha just ran through the numbers, so I don't need to tell you which businesses are strong and which are weak. But overall, the fact that 290 mall stores or stores that were unprofitable, the rationalization process closed. The part of the process here and the reason digital sales are better is because of what we've gone through. Not only are people not able to go to stores, but they're not going to malls. And guess who loses? It's the REITs and the mall operators. It's not the Gap stores who've already suffered through the pain. They could be opportunistic here. They have been. They're also going for capital-light partnerships. Whatever they're going to do with Kanye, it will certainly add some value. And if you look at the brands that matter, Guy Adami alone is probably keeping Athleta in business, and Old Navy is a stalwart that's always been strong, and they stay strong. Stay in the Gap here.
His love of yoga pants cannot be denied, that's for sure. Let's get more reaction to Gap's quarter. Bring in Gap shareholder Delano Sapporo of New Street Advisors. Delano, great to have you with us.
Thank you, Melissa.
We are getting some more headlines from the conference call saying second half sales performance to be fueled by Athleta and Old Navy, perhaps not a surprise. It also expects higher shipping expenses with online orders, perhaps also not a surprise. No fiscal full year outlook on sales and earnings because of the uncertainty. Delano, what does Gap still need to do to complete this turnaround?
Yeah, I would say looking forward to the future, continue to strengthen e-commerce. So like the numbers that we saw, like the number we saw top and bottom line. So continue that strength in the e-commerce wave. Also, we really want to see what Athleta is doing as far as, is this a wave of kind of the pandemic new normal, we're all working from home, or is it really a strong brand that we're going to see consumers flock to in the future? I really want to see what they do with that execution going forward as well. And I think, as mentioned, the partnership with Kanye and Yeezy in 2021, I really want to see how consumers react to that. But I think they had strong numbers. I like what happened at the top and bottom line, but looking for more as well.
Is there still the possibility of a breakup of the company in some shape or form?
I think possibly. I mean, you're looking at the different brands that they have, and obviously some spin-off value there. But I like what they did with this quarter, and I like what they've been doing so far. So if we continue to see this, maybe they kind of keep all the brands together and house them under the same roof. But there is a possibility of that.
How much do you think Kanye could actually add?
Oh, that's a great question. This is one of those big kind of options that they took. It was a thing that's a risk, but I think there's high upside. When you're looking at someone that's really a genius in the fashion space, what he did with Adidas in other areas, I think he can bring that over to Gap, not only on the e-commerce front, but with the consumers and eyeballs he draws. And if fashion's a very fickle area, but when you hit, you really hit well, and I think that's possible here.
It's Karen. Let me ask you something about the rent. I didn't see if they were continuing to not pay rent expense this quarter. as they try to rationalize their store. How do you think that plays out with the landlords ultimately?
I think that'll be very interesting to watch. I'm watching closely. I want to find out what happens when I'm going to listen to their earnings call. But I think it's really interesting to watch what they're doing as they make that shift. The new management came in, and I think they're trying to play things different, but I'm watching that closely as well.
Delana, great to speak with you. Thanks for your time.
Thank you all.
Delana Sapporo of New Street. Guy, you on board, Gap?
You know, I have a pair of those Yeezys, and I'm going to do the inside baseball
Wait,
thing.
do
You know,
you
we
really?
have a conference call
Wait, is
today
it the
at
same?
12:30.
Do you really
no,
have
of
a
course
okay.
I
All right,
don't.
I don't
of course
know.
I don't. The only reason I even know what a Yeezy is because my daughter had a pair on, and I said, "What are those?" And she told me. Then she told me how much they cost, and my eyes started to tear. But you know, at our conference call, you heard me in the background talking to my daughter, and she just got a package from Athleta. I mean, it's all over the place. If they pull the ripcord on Banana Republic, which they should have done a while ago, I mean, you look at their operating margins, they were 2%. The street was looking for minus 6.6. Inventories were down 3.5%. This sets up for a stock that should be trading $22. Go back last summer, it traded between 18.5 and 19 for a long time. So that's where we're probably going to stay for a while. But it closed above 19, and I think this is off to the races.
Steve.
Yeah, I agree that with that level. Guy just said that 19 level is the February high, so we're sort of in the middle of no man's land. 14.25 is your base on it. But to your point, the conversation of the breakup value is what's going to keep this stock trading higher. If that leaves the conversation, then this stock trades lower. You're talking about a total enterprise value of over $12 billion with Athleta and with Old Navy. But I'm going to give you one more. Guess, GES down 47%. This is a sheer example of everyone was betting against Gap stores. There's been more people betting against Guess, GES down 47%. Look for that one with a 22% short interest to rally on the back of a Gap stores.